What if I told you that a simple 3-digit number could be the key to your dream home, your next car, or even your dream job? You'd probably think I was crazy, right? But it's true. This little number, your credit score, has a huge impact on your life, and most people don't even realize it. But here's the scary part. This same number could also hold you back. Imagine getting denied for an apartment you really wanted, or worse, getting stuck with sky-high interest rates on a loan, all because of your credit score. Today, we're uncovering the truth about credit scores in the US, and by the end of this video you'll have the tools to improve yours fast. Stick around because the tips I'm about to share could change your financial future forever. Let's start with the basics. A credit score is a 3-digit number that tells lenders how good you are with money, specifically how likely you are to pay back borrowed money. It ranges from 300 to 850. The higher your score, the better. Think of it like a financial report card, except this one impacts way more than just your grades. We're talking about whether you get approved for a car loan, how much you'll pay in interest on a mortgage, even if you can rent that awesome apartment you've had your eye on. Some employers even check your credit score during job applications. Your financial habits could actually affect your paycheck. So, how exactly is this magical number calculated? It's based on factors like your payment history, how much debt you have, and how long you've been using credit. The higher your score, the better your chances of getting approved for loans, credit cards, and apartments, all with better terms and lower interest rates. Alright, so we know that a good credit score is important, but how exactly is it calculated? It all comes down to 5 key factors. 1. Payment history. This is the big one, folks. This factor alone accounts for 35% of your credit score. Paying your bills on time every single time is crucial. Late payments are like a giant red flag to lenders. Set up auto pay, reminders on your phone, whatever you have to do, just make sure those payments are made on time. 2. Credit utilization. This one's a little trickier. Basically, credit utilization measures how much of your available credit you're actually using. The key here is to keep this number low, ideally below 30%. 3. Credit history length. The longer you've been using credit responsibly, the better. 4. Credit mix. Having a variety of credit accounts shows lenders that you can handle different types of debt. 5. Opening new credit accounts can be helpful, but too many hard inquiries in a short period of time can hurt your score. Be mindful of how often you're applying for new credit and try to space out your applications. Master these factors, and you'll be on your way to a stellar credit score. Alright, let's be real for a second. Why should you even care about this mysterious credit score thing? Is it really that big of a deal? The short answer is yes. Your credit score can have a huge impact on your life, both in the short term and in the long run. Picture this. You find your dream apartment, the one with the perfect location, amazing amenities, and that gorgeous kitchen you've been drooling over. You're so excited to apply, but then, bam, the landlord checks your credit and rejects your application because your score is too low. Or imagine this. You're finally ready to buy your first car, that sleek sports car you've been saving up for. You head to the dealership, excited to sign on the dotted line, but then you get hit with a curveball. Because of your low credit score, you only qualify for a loan with a sky-high interest rate. That means you'll end up paying thousands of dollars more over the life of the loan, all because of that pesky credit score. A bad credit score can affect much more than just your ability to get an apartment or a car loan. It can also limit your job prospects, make it harder to get insurance, and even affect your ability to rent an apartment or get approved for utilities. In some cases, you might even have to pay a higher security deposit or get denied altogether. A bad credit score can trap you in a cycle of debt. By taking control of your credit now, you can set yourself up for a brighter financial future. Okay, so we've covered the scary stuff. Now let's talk solutions. The good news is that improving your credit score is totally doable, even if you're starting from zero. Here are a few simple tips to get you started. 1. Pay your bills on time. Remember how we talked about payment history being the most important factor? This is where it all starts. Set up auto pay for all your bills or create reminders on your phone so you never miss a due date. 2. Reduce credit card balances. Remember credit utilization? Aim to keep your credit card balances below 30% of your available credit limit. If you have high balances, create a plan to pay them down as quickly as possible. 3. Check your credit report regularly. You're entitled to a free credit report from each of the 3 major credit bureaus, Experian, Equifax, and TransUnion, every year. Go to annualcreditreport.com and request your reports. Check them carefully for any errors or inaccuracies that could be dragging your score down. 4. Avoid new hard inquiries. Every time you apply for new credit, it triggers a hard inquiry on your credit report. Too many hard inquiries in a short period can make you look like a risky borrower. Be strategic about your credit applications and only apply for credit when you really need it. Alright, you've mastered the basics. Now let's take it to the next level. Here are a few secret strategies to supercharge your credit score and achieve those 800+ dreams. 1. Request a credit limit increase. This is one of the easiest ways to improve your credit utilization ratio without actually paying down your balances. Call up your credit card issuer and simply ask for a credit limit increase. If you've been a responsible cardholder and have a good payment history, they might just say yes. Just be sure not to go on a spending spree once you get that limit increase. 2. Dispute negative items. Remember those credit report errors we talked about? Don't just ignore them. If you spot any negative items on your report that you believe are inaccurate or outdated, dispute them with the credit bureaus. 3. Use a secured credit card. If you're new to credit or are rebuilding your credit after some bumps in the road, a secured credit card can be a great option. With a secured card, you put down a security deposit that acts as your credit limit. By using your secured card responsibly and making on-time payments, you can build a positive credit history and eventually qualify for a traditional unsecured credit card. 4. Become a responsible renter. Did you know that your rent payments can actually count toward your credit score? Services like RentTrack and Experian Rent Bureau allow you to report your on-time rent payments to the credit bureaus. 5. Avoid closing old credit accounts. It might be tempting to close old credit card accounts that you don't use anymore, but resist the urge. Closing old accounts can actually hurt your credit score. Instead, consider keeping those old accounts open and use them occasionally for small purchases that you pay off right away. Imagine the freedom of knowing your credit score is no longer holding you back. So there you have it. The truth about credit scores and how you can take control starting today. Remember, your financial future is in your hands, and it all starts with that 3-digit number. By following the tips and strategies we've covered today, you can boost your credit score, save thousands of dollars in interest, and unlock a world of financial opportunities. If you found this video helpful, hit that like button, subscribe for more life-changing tips, and share this video with someone who needs to hear it. Let's spread the credit knowledge and empower everyone to achieve their financial goals.